greenhouse gas accounting verification is coming from the corporate perspective of greenhouse gas accounting. So looking into scope 1 and 2, greenhouse gas accounting, you started to look into verifying that when it became part of official statements, sustainability reports that have been verified through public accountants. And another wording in that context is not only verification, it's also assurance and assurance levels. So there's the assurance level of limited and the assurance level of reasonable. And the difference of these statements is a limited assurance level says this result is reliable to the extent that we did not find anything that speaks against that. So it has been done consistently. We have done a sampling of the background data that has been used to create that greenhouse gas account. And therefore, we can assure that it is 80% with 85% of probability not wrong, the statement. And this statement is also called opinion. It's 85% probability not wrong is a so-called negative opinion, what you are saying there. Even if it's 80% reliable, is positive, it's still called a negative opinion. And when you want to have reasonable assurance, that would then say we are 95% ensuring and see that it's reliable, that this is correct. What do we learn from that? Even if we talk about verification, it's not about 100% truth or 100% correctness, because everybody knows greenhouse gas accounting and product carbon footprint is based on modeling the reality, and we can get with better data, with more primary data, closer to reality, but we are not fully reflecting reality. We are always reflecting a model of reality. And this model can become better and better. And so verification helps us to create this trustworthiness. And so why now in the product carbon footprinting field, we also see more and more the requirement for verification. When we started doing product carbon footprinting, this was done for comparing products. And critical review has been done for saying this product A is better than product B or less environmental impacts than product B. And for such a critical review statement, critical review is perfect. But greenhouse gas accounting has evolved from scope 1 and 2 only to be verified. Now also scope 3, greenhouse gas accounting, is becoming mandatory. The CSRD requirement is requiring companies to look into their supply chain and to collect data from their suppliers. And in order to include that product carbon footprint from suppliers, cradle to gate, into your corporate greenhouse gas accounting, you can only do that if you have verified information coming from your suppliers. And that's the reason why we are getting verification becoming more important and getting attention across supply chains, that manufacturers are requesting from their suppliers to get a verified product carbon footprint so that they can use that information to calculate their scope 3 corporate accounting part and have that verified. So that's the reason why we have two different types of creating more trustworthiness. We have critical review and we have verification, and both we apply also to products, especially in the context of product carbon footprinting.